Everybody, this is Jim at SP500chart.com, and I'm coming to you from Las Vegas. In the next 2 days, I'll be coming to you from Los Angeles. Thursday, Vancouver, British Columbia. You know, I don't know how that's going to go, but here we are today. And basically, I'm going to keep it short and sweet so that I can make sure the entire thing gets uploaded. And the short and sweet of it is, look to this bottom line as support. If this breaks, then I think we're setting up that move down to test the blue line here in the low 1330s. Look for this line to give some resistance, as it did for the entire 5-day period from the 3rd through the 9th. And then look for this line right here. If this little gray line can get taken out, look for this line to also be resistance. So we're still looking at our target here, 1378 to 1380. We bounced nicely on the tag of this line, and by the way, this line does go back further than what this little chart shows. It goes all the way back to here, and you know, if we extend that to there, it doesn't quite line up, so let's just leave it where it is, okay? Because this is the head, this is the right shoulder. Now, you'll remember we got a couple rules for trading an inverted head and shoulders pattern, and the rules are: you go long on a return to the neckline, a tag of the line drawn from the head and the right shoulder, or a 40% retracement of the entire breakout move. So I don't see that we've had a 40% retracement. So I think the first thing that would happen would probably be a tag of this rising line that has its origin from the head and the right shoulder. Now, these are basic rules for trading according to Edwards and McGee's technical analysis of stock trends. And they don't always work out just perfectly. Sometimes you'll get a break of this line and you will come down and tag that neckline. But those are basically where historically these patterns have found support after the breakout, and then that first sign of weakness. And I really wouldn't think that move right here quite qualifies. So let's keep our eyes on it. And by the way, I got to remind you, this is just for educational purposes, not supposed to be used as investment advice. I'm just a guy who draws lines on charts. You have to draw your own conclusions and make your own investment decisions based upon your personal financial situation. If we look at a 10-minute chart, you can see that essentially this almost looks sort of suspiciously like a back test of this little broken rising wedge right here, but let's see if it can continue. Sometimes you get a larger channel, and then you get these little patterns that are inside of it, but you can see that clearly the strength today took us right back to that gap down area from last Friday, and we couldn't overcome that. So let's see if this bounce is significant enough to propel this market on up to setting a new high over that 1354 level that was set last Thursday. So look, that's what I'm looking at in the S&P. I'm just got to keep this brief while I'm on the road. We'll return after this week. Starting next week, we'll start getting into a little bit more in depth, and I just appreciate your patience while I'm actually out earning a living as a photographer. So look, take care, and thanks again for watching.